as far as I can tell, talking to traders, talking to fund managers today, the three main concerns are the U.S. economic data that came out at 8:30, the European markets, and the Ebola scare. It doesn't seem like calm heads, cooler heads have prevailed at all today, because that's driving people mad. They're tweeting crazy rumors that are completely unfounded and turn out to be totally untrue.
Well, and yet when I've been messaging with traders today, they're saying it doesn't feel necessarily panicked, and we have indeed seen a bounce up off the lows. Keep that in mind. And also, to take a step back here,
a bounce up to a drop of 250.
Well, yes, but we're in other words, take this day in isolation. We're not seeing that huge of a drop. We've seen drops like this recently, and that's really why we're paying so much attention today. It's because given the past 2 weeks and the shift in sentiment that we have seen, that's what makes today remarkable. Again, if you take today in isolation, if we were seeing a 1.5% drop, okay, big deal. But it's because we have seen it on the back of all of this other market action.
Okay, so you've been speaking to traders in the U.S. I've been speaking to traders in Europe. There they say it is actually panic. They are bracing for markets to go even lower. Let me just run you through some of the numbers. The Euro Stoxx 50 falling 3.6% today. The FTSE MIB, the market in Milan, down 4.5%. These are huge moves. The investors I've been speaking to say the immediate problem is Greece. Look at what happened in Athens today. At one point, the market in Athens was down 10%. The move on the 10-year Greek bond up 75 basis points. It's trading back above 7.5% right now. That is a huge move higher. The concerns out there, deflation. They're worried that Europe is going to become Japan and we're going to go into deflation. Weak growth, that's been around for a while. There's also the policy overhang. This is not a situation where Mario Draghi can just swoop in. There need to be reforms before he can actually move to U.S.-style quantitative easing. There are also concerns about the Russia sanctions, which you mentioned, and they too are having their own issues with Ebola. Don't forget, a patient, a UN worker, died in Frankfurt last night with Ebola.
Well, and to bring it back to Ebola for a minute, I mean, I know it's a cliche, but it's true. The markets don't like uncertainty. Investors are not fans of uncertainty. So at the same time that you have quantitative easing ending, you have these headlines about a potential global epidemic of this disease. You don't know where it's going to pop up next. You don't know how many people it's going to affect. You don't know the dollars that it's going to affect. So all of these are still open questions.
At the same time, we do know that people who were traveling on planes with the index patient, Thomas Eric Duncan, who passed away in Dallas, have not yet tested positive for Ebola. People that he spent time with, his friends and family, haven't tested positive for it. Only people who are taking care of him near the very end, at the most severe stage of his infection, have come down with it. We're going to talk about that. We're going to cover Ebola as a topic, but it's interesting how freaked out market participants can get, especially in this age of Twitter and social media.